As we've just talked about prior to the 12 o'clock news, local government throughout New Zealand has been imposing seriously significant double-digit rate increases are intending to, as a result of fixing their rates during the what they call long-term or annual plans. They have been horrendous rates increases, which in many cases are running at 4, 5, 6, sometimes 10 times the rate of inflation. I know, extraordinary. And one of those that has done so is the Central Otago District Council. So they've decided that they're going to impose an 18% rates rise upon their poor, unfortunate constituents over the next 12 months. Well, as you would imagine, there has been some pushback to that concept from constituents, some of whom have said that this is a council that's out of control, that 18% at the time that they are going through the worst cost of living crisis that they've had for decades, is an unfair burden, and that there are 1,001 ways you might have restructured some of the work you're going to do to accommodate the fact that people are suffering and finding just paying the bills and having enough food on the table and paying particularly the electricity bills a significant expense and hardship. So the Mayor of Central Otago has come up with a solution, and we've decided to go and get some expert advice as to whether or not that solution is a good idea. Joining us to talk about it is Forsyth Bar Investment Advisor Jeff Matthews, and he joins us now. Jeff, lovely to have you on. Good afternoon to you.
Hi, Michael.
Where are you? Where are you based?
I'm usually in Auckland, but I live on Whangaparoa Peninsula, so I'm working from home today.
Oh, good on you. So you're within, the Auckland City Council area, are you?
Yes, I am. It goes all the way to Wellsford these days.
Gosh, that's a long way, yeah. Tell me, what projected rate increase are you personally paying this year, or projected to pay this year?
I think it's somewhere in the vicinity of 4 to 5.
Wow, 4 to 5%.
Yeah, I haven't looked lately because it's been an ongoing debate, but I think it's somewhere between 4 and 5 is where they settled on.
Can I just say that's just remarkable? I mean, there's the rest of us in New Zealand going, oh my God, that's pretty good. You must have a decent mayor.
It's beyond my pay grade.
But you do know that you're only going to be paying an extra 4 or 5% on your rates this year. Well, in Central Otago and many other small districts throughout New Zealand, they're going to be paying double digit, and 18% is predicted. Now, the Mayor of Central Otago, Tim Cadogan, in questions to constituents or advice to them when they've come to him and said this is just excessive and ridiculous, you would have heard the introduction to what I've just said, said, listen, why don't you just reverse engineer, reverse mortgage your asset, and then you'll be able to pay it and it'll be tickety-boo. Is that good advice?
Maybe from the council's point of view. I'm not sure it's the right advice for the individual. And I say the issue of rates is a big one compared with central government versus local government. But if you were, just give you an example, I have friends who live in San Francisco, and I know that their annual property tax is 1% of the value of the property. So if you live in a $7 million home, that's $70,000 a year in rates, basically. So you could argue that we perhaps get off lightly.
Except I want to compare with what I've been paying up until now, and then suddenly to have 18% imposed in the middle of a cost of living crisis seems a little excessive to me.
No, I absolutely get that, but it's one of those things that a lot of stuff gets deferred and pushed away into the future. So, if a particular area needs a sewerage scheme and it costs $50 million, where does the money come from, and who pays for it? That's a much bigger issue. And I know that a number of years ago that the Kaipara District Council in the north ended up with a sewerage scheme that cost $50 or $60 million, and I mean, it was a complete disaster, and central government had to bail them out. So there are costs involved in smaller centres that's hard to justify over a small population base.
They, in the end, sacked the Kaipara District Council, didn't they? As I remember.
Yeah, they did. Yeah, they did.
They put in commissioners.
Yeah.
Okay, Jeff, tell me about reverse mortgages, how they work and why they wouldn't be a good idea to pay your rates with.
Well, first of all, I'm not a mortgage broker, but clients have come to me in the past and asked me, if I run out of money, what are my options? And a reverse mortgage is one of those options. I think the major player in New Zealand is Heartland Bank. And basically, if you're over 60, you can access some of your equity from your home. And quite often people do it to support family members or just day-to-day living expenses or medical. Maybe somebody needs a hip replacement and it's $35,000, and you don't have enough spare cash. Then a reverse mortgage is an option. The problem then is it's usually about 2% more expensive than a regular loan. So if you went to your bank and borrowed money, I think the floating rate's about 8% at the moment. So if you were borrowing money against your house at 10%, that is an expensive way of funding it. But at the end of the day, you can't take the house or the money with you. So if you need it to maintain your lifestyle, then it's an option. But just to take out a reverse mortgage to pay this year's rates bill isn't a strong enough contender, in my opinion.
So would a bank actually allow you? Well, I suppose it's up to Heartland, but so you're saying I can't get a reverse mortgage with any of the major banks, BNZ, ANZ, Westpac, etc.
They seem to specialise in that market. Otherwise, you'd normally go to your bank and you've got a first mortgage and you'd borrow money against your house. But
it'd be and that would be interesting, because even when you go to the bank and say to them, listen, I'd like to increase my mortgage or something like that, you've usually got to come up with a reason, don't you? So would in your view, because there'll be a lot of people struggling to pay their rates this year, particularly with the percentage increases along with everything else that they're contending with, electricity charges and the like, would banks, do you think, be amenable to allowing you to increase your mortgage to pay your rates?
I say I'm not a banker, but I wouldn't think so. I mean, the problem from the bank's point of view is, okay, you've got tons of equity in your home. It's like, how are you going to repay the loan? And they always seem to be obsessed with how are you going to make the repayments now that you've increased your loan, rather than, you had a $800,000 house and you've only borrowed $100 against it. There's tons and tons of equity, but they seem to be obsessed with how are you going to repay the loan. Whereas the reverse mortgage doesn't have the same kind of drivers. They probably like you to borrow as much money as possible for as long as possible. What happens at the end of the day with the reverse mortgage is, if you sell the house or you move into a care facility, then the loan gets repaid plus the interest and any fees. So you're not outlaying any money, you're not paying any interest payments, but the payment is kind of ballooning up, in the background.
And the reason they charge, I guess, the additional interest on top of what you would normally get from a mortgage is because they don't